I'm Irk, and this is Get Irked, my channel dedicated to teaching anyone how to invest for the long term. If you're watching this video in April 2021, good for you. The time to be researching what to do when a stock market crashes isn't after one started, it's when the market's at all-time highs like they are right now. Let me get this out of the way first. I'm not a professional advisor, and what I'm going to talk about is my strategy for crashes. You should consult with a professional to make sure your plan is best suited to your individual circumstances. One of my key rules to long-term investing is to never sell into a panic. While it can be painful and difficult to resist the urge to liquidate positions when a market-wide sell-off happens, selling into a panic never pays off in the long run. Investors who sell into a panic are typically the same ones who wait for the market to go just a little bit lower before buying back in. When the market does start to recover, these same investors will think that the market will test the lows and continue to stand on the sidelines. Then, when the market fully recovers, these same investors will now say that the market is too expensive and they won't put their money back in. The result? These investors take losses selling into the panic and then miss opportunities by not buying on the bounce. Never ever sell into a panic. I am such a nerd that I created a chart which shows the performance of all of my assets on a day-to-day basis for all of 2020. At the market's low on March 23rd, the S&P 500 had sold off 35%, and my assets were down an incredibly painful 17.56%. However, I will pat myself on the back for only being down 17.56% when the S&P 500 was down nearly double that, as it is outperformance to lose less than the market on the downside. Even after the 35% drop, many analysts were warning that the market could sell off 50% or even more, which caused many investors to panic and sell at the market's lows, down 35%. Of course, March 23rd ended up marking the bottom for the sell-off, as the Federal Reserve Bank announced it would begin buying all kinds of bonds and other assets in order to provide liquidity and stabilize the markets. From that bottom, the S&P 500 rallied more than 60% to close the year with a 16.26% gain. Personally, my portfolio closed the year up 27.88%, once again outperforming the S&P 500, this time by more than 12%. Had I sold at the bottom, not only would I have taken a loss that would have required years to recover from, I would have also missed out on a nearly historic annual gain. The moral? Never ever sell into a panic. What should you do during a market crash? If you don't have a decent cash position, the time to sell is at the market's highs. While it can be difficult to take money off the table when it feels like the markets are headed higher, no one ever got hurt taking a profit. With cash on the sidelines, you can take advantage of the market sell-off by adding to your positions in stages. For more on how to buy in stages or how much cash I keep on the sidelines, check out my videos on both of these topics.